Hi everyone, and welcome back to another Customer Futures conversation. I'm Jamie Smith, Director at Customer Futures, and I'm delighted to be joined today by Jon Evans from Digidentity. And today we're going to be talking about qualified electronic signatures. There's so much happening in the market right now around digital identity, around digital wallets, around identity and access management for employees. But we think there's this really interesting corner around digital signing that is probably a bit underexplored, and we think packs a punch and could be a really interesting area for digital identity teams to start with. So Jon, do you want to do a quick introduction to yourself and Digidentity, and then we're going to dig into what we're going to talk about today?
Yeah, very happy to. Thank you, Jamie. So, as Jamie says, Jon Evans, Digidentity. I've been working with Digidentity for over 7 years now. Although actually, I've been working with them for a bit longer because I was head of identity at Post Office, and we had a strong relationship with Post Office going back about 14 years. So I've known the company for a long time. I always describe us doing three things. So personal identity, as I call it, so proving that Jamie Smith is Jamie Smith to a defined regulatory or sort of business set of requirements. Business identity, which is obviously identifying the business, the entity, the organization, and then binding the employee to the business and authorizing them in some cases to act on behalf of the business. And digital signing. So we are a qualified trust service provider, so we can issue signing certificates up to the highest level under both EU and UK law. And as you said in your introduction, this is the kind of framing for today's conversation. And I would argue our most exciting product. So I'll probably leave it there. I look after business development. If it's not Dutch, I look after it. We're a Dutch-based company, so I do everything that isn't in the Netherlands.
And you're pretty global, right? So you've got a very large footprint, and I think we spoke before about 250,000 enterprise customers using one of your products somewhere.
Yeah, that's really interesting as well. I mean, we did a bit of a deep dive, me and my team, on that very point recently, and it's only when you step back and you realize quite how far-reaching Digidentity goes. I mean, we're in 4 or 5 different continents. We've got a big presence in Australia now, for instance. We're doing a lot in Asia as well. It's kind of going a bit crazy, and a huge amount in Europe as well, with all the kind of wallet initiatives that are kicking off and all kicking off at the same time. So yeah, really exciting. And yeah, that 250, you've heard me say it before, 250,000 corporate clients. That's actually nearer 300,000 now.
Wow, and they're pretty big brands, many of them. But I suppose this takes us to what we want to get into today. And when we've spoken before, it has been about digital identity and proving who you are, maybe even digital wallets. And the reason I wanted to have this conversation was because digital signing is, I think a bit of a sleeping tiger in terms of what might be possible for the digital economy. Digital identity is a really complicated topic, a very political topic. And it's a very charged topic because it's about identifying who people are in the context of their private lives and what they're doing online. And there's a very good reason for organizations to want to know who people are when they're onboarding them, for example. But when you're signing a document, a lot of the time we really need to know that it's Jamie signing and not someone else. And so what if we start looking at where identity is kind of showing up a bit more quietly, maybe behind the scenes in moments like signing? And, there's so much happening in the market, as you mentioned there, around the European Union's EI-2 framework, which is now saying that 27 member states have to offer a digital wallet or a digital identity wallet to their citizens. But on top of that, Apple and Google are coming in stage left with their own wallets in which you can, Google, you can already add your passport. I think we're well above 10, 12 states in the US now where the driving license can be issued into a US wallet from Apple and Google. And actually, I think, there's something like 100 million people who could already benefit from having a digital identity in their Apple and Google wallet. So this is coming. And then on top of that, governments around the world are going to be issuing their own digital wallet with a digital identity in it. So, if you're a bank or a regulated entity like an insurance company or a healthcare provider or a pensions provider, like this is a very complicated space. And we think signing is not really being talked about in a way that maybe it should, because so much of it is about the front door. You know, I arrive, is it Jamie? Um, can we prove it's Jamie? And then AI is making it even harder to now detect, because, you know, maybe my selfie is AI generated. Maybe the government document that I scanned is AI generated. There's all sorts of stuff around deepfakes. So it's getting ever more important to fix identity, but ever more complicated, with many more players in the market, many more um, areas where it can go wrong. And so this digital signing idea, you know, maybe I've been onboarded to the bank. I've gone all the way through the processes. I want to take out a loan or a mortgage or an insurance product. And actually, I need to sign something saying it really is me. And how do we know that it really is still me signing that thing? And it's, I think, quite a really interesting space to get into. And we wonder if signatures might be a really important starting point for a digital identity conversation, rather than going in and saying, you know, oh, we need a wallet, we need identities, we need to do all these kind of big checks as someone comes into the business. You know, are we leaving something behind when we think about when they're signing it? But Jon, could you talk a bit more about um, you know, digital signing, why the level of assurance matters? Because some people might not really understand the difference of different levels of signature. Maybe we start there, and then we can dig into how it connects to digital identity.
Yeah, very happy to. And there's loads in what you just said, by the way. And I've been doing this for 15 years and we've known each other for most of that time. The conversations I was having in my first few weeks are the same conversations we're having now in a lot of cases. And that's kind of quite interesting. So the industry hasn't moved as quickly as everyone thought it would. And I think that's something to really be cognizant of. And, you know, I've always often said that this is not a technology problem. This is a behavioral change problem. And it's probably you know, I work in business development and sales, and I can't help think that when you were talking then, the way that we've tackled it as marketeers and salespeople, we've actually looked at the wrong point in the customer journey. So we've, as you said, I don't know, I'm paraphrasing you, but you're talking about identity, what I call identity on the way in, right? So proving that Jamie is Jamie when he onboards to a company or when he, you know, opens a current account, whatever it may be. We need to make sure that Jamie is Jamie to a defined standard. And then we take our hands off the steering wheel. Would it have been much better to actually think about the moments where Jamie's transaction or something changes? And signatures is a really good sort of case study or use case for that, because people understand signing. People understand because they do it now, right? We know we have to sign something and it makes a document legally binding. The framing for digital identity, the way that we've approached it, the way that I've approached it, the way the industry's approached it has always been, you need to prove who you are. So you're basically putting a piece of friction in front of someone that wants another product. So inherently, you're making the consumer irritated on the way in. And I don't think that's a good way of selling the proposition. So I think that probably we'll end up, as we go through this conversation, alighting on an idea that actually we probably started at the wrong end of the journey, in the wrong place. But going back to your sort of question, different levels of assurance for signatures. Yeah, so there's effectively three. There's simple, advanced, and qualified. So simple is the lowest form of electronic signature. There's no real identity. It's basically just, you know, it's the same person coming back, but that same person might be Mickey Mouse. Advanced has some level of identity behind it. And then the qualified is the sort of gold standard. It's a European standard. It's accepted in the UK. It's also considered the gold standard kind of globally now as well. We work with, there's a large client of ours actually, just to sort of land that point, that operates in 33 countries. They're using QES, so they've accepted it as the correct standard for their own countries and their own use cases within those countries. That does lots of different things. So it protects the business. And I would say, you know, one of the big things it does is it reverses the burden of proof. We'll probably talk a lot about property transactions in this conversation, which I think is a brilliant use case for qualified electronic signatures. So what would happen if someone says, no, I didn't sign it, and it's a QES signature, they would have to prove in the court of law that it wasn't them. If it was anything less than a qualified electronic signature, it would be up to the relying party, so the law firm or the lender, to say, oh, yes, it was you. So that's a brilliant thing for the organization because it protects them.
That little shift, and we gloss over it so easily, that if I'm signing something and you have made it a qualified signature, if later there's a problem with that signature, you can take me to court and say it was definitely you. Look, you signed this and we've got your identity attached to it. But if it wasn't, if it was just a kind of tick box or a wet signature and the
Mm.
browser was open and anyone could have signed it, if they try and take me to court and say, yeah, you definitely signed this, it's on the business to prove that it was me signing, which is a much higher standard. So this is not theoretical. This is about courts of law and audit and compliance and who can prove what. So it's potentially driving a cost into the organization that they're going to have to provide the proof that it was Jamie signing it, as opposed to a qualified signature where it's definitely me and I can prove that it was me.
Yeah, absolutely, and it's all based on the identity, so the checks on the way in. Okay, so each of those three tiers of electronic signatures require different levels of identity proofing that sit behind it. And as a qualified trust service provider, obviously you have to go through quite a rigorous audit process to be granted the sort of the certificate, the license to practice, the issuance of QES and the management of them, and also the cryptography, that the authentication piece, right? So making sure that the binding between the person who took out the identity check originally is the same person, which is super important. So it's a total game changer. The interesting thing, I mean, it's 2026, right? I mean, how we're all signing still with wet ink and witnesses is nuts. There's various different reasons for that. One of them, I think, is the fact that the regulator doesn't mandate which use cases and where qualified electronic signatures are most appropriate. So it's left up to the relying party to make a risk-based decision on where they think it's appropriate. Now, most of them are not thinking, in the medium to long term. They're just thinking about what's the lowest cost, lowest friction journey at the moment, and therefore they fall back on simple electronic signatures, which is not really appropriate. And I always give the example: a year or two ago, I got a finance contract, big loan for a new car. I'm signing a finance contract like 50 grand with a simple electronic signature. Now, if something bad goes with that transaction and I say I didn't sign it, that relying party is in a difficult situation because they now need to prove that I did sign. And, there's a lot of pain in that for them. Now, I wanted my dream car. Let's call it my dream car. It's a big value transaction. I'm expecting a bit of friction in terms of proving my identity to sign that document. I've already emotionally committed to making that purchase. So there is no real, there's no real downside in losing the customer because they're using a simple versus the qualified. And in the context of signing off a finance agreement for 50 grand or whatever it was, whether it's a pound or 20 pounds for an electronic signature, it doesn't really matter. So there's no real reason why I shouldn't have signed that contract with a QES from a relying party point of view.
There's a funny flip there where when the transaction really matters, signing mortgages, signing insurance documents, big loans, we're trying to make the kind of experiences as simple as possible. And yet when we're onboarding to financial products, we're doing all the ID checks and so on. Actually, we're interrupting the customer experience and we're off introducing a lot more friction than we need. So we're doing on the way in, as you say, doing lots and lots of identity checks. And then when someone's signing something, actually when the transaction matters and the capital's at risk and there's things that are really relevant for the balance sheet and, the audit teams, they need to be able to prove that who signed it. And yet the bar is a lot lower. And I think this is the paper we've just written around where qualified electronic signatures might be a better place to start for identity than the front door. And there's this gap between the level of assurance we need at the start of a customer's journey and the level of assurance once they're in using the product and maybe doing things that require a high level of assurance, and they're not matched. And so QES not only kind of helps you level up what the level of assurance that you might need for an identity, but also it means that maybe it's a really interesting place to start, because when someone's signing something, you could level up the identity, and then later on in the conversation, we'll talk about where that identity might be reused. You touched on home moving. And I think it's
Mm.
a really interesting example, because you talked about a high value car purchase, but it's kind of the same. When you're buying a home, it's one of those things you do in your life. It's one of the most stressful, one of the most emotionally important things you do in your life. And when you buy a house, you'll probably take a few hours out of work. You'll drive 2 hours to get to the lawyers or whatever you need to do the wet signature. You'll crawl over glass to make the transaction happen. You're happy to put up with friction, and in some cases, the friction matters because it's a hard fought.
Yeah.
It should be full of friction doing something as important as that. Uh, and yet we don't digitize that experience in a way that we probably should. So could you talk to us a bit about conveyancing as it is in the UK, and kind of the mortgage process, and where we think qualified signatures are going to change things?
Yeah. Yeah, absolutely. So HMLR, I'll take you back to about 12 months ago. HMLR, so Her Majesty's Land Registry, published an announcement basically effectively saying, we will allow qualified electronic signatures to sign mortgage documents, which was a big, big statement in the industry. Amazing. Don't need witnessing. You can use a QES. So it's potentially a game changer, on the surface, a game changer. Now, there's two things, and this comes back to my point that it's not a technology problem, it's a behavioral change problem, or some cases a policy problem, challenge. They, the reason why that market hasn't exploded is basically down to two things. So one, they still insist that they won't allow signing via a counterpart. So the signature buyer and seller side have to sign in one complete signing flow. And they don't allow for mixed signing. So both the buyer and the seller's solicitor need to be using the same qualified trust service provider, which in a very immature market is problematic and creates enough friction for there to be not the uptake that the industry had hoped for and expected. There has been, and I was chatting to a mutual contact and friend of ours last week, so I have the fresh numbers on this, Richard Oliphant. He said that there was been 6 QES transactions in the last around about 12 months since that announcement. So that's a massive failure, and that's on HMLR, and there's a lot of industry pressure for them to change that. It will happen. It's a case of when, really. But that's the sort of downside. There's a huge market there, and interestingly, and credit to Nationwide, they released I can't remember when it was. I think it must have been the beginning of this year or a few months ago, a press release stating that they will allow QES signing uh, um, for mortgage contracts where they are the lender, which is a really big statement and very helpful to the market as well. And why have they done that? Well, they've done it for a whole multitude of reasons. Because we've already talked about some of these, because with QES, you don't need a witness. Because with QES, you reverse the burden of proof. So you're protecting the organization. You're stripping out a tremendous amount of cost out of the process. I mean, I sat down and did with a couple of lawyer friends of mine, we did a paper. I think it's available on the Digidentity website, just a one pager that shows the incumbent analog process, the costs versus the digital process, and the amount of time and friction and cost that it strips out. It's it's so obvious that it's the way forward. And you're signaling to your customers the kind of bank you are. And I think it's a brilliant PR statement for Nationwide. We're digital first, we're embracing technology. And I think that's a really positive statement. And I think that has helped move in the market. And there's a lot of, banks, lenders, and also case management systems, QTSPs, that are looking at the market and are ready to go. I mean, it's a brilliant one for Digidentity. I mean, we partner, as you know, with DocuSign, and the proposition that we have with them is that their signing platform is obviously state of the art, but with us, they also have a QES provider, so a QTSP. And with a QTSP, and this is something that isn't talked about, you can satisfy not only the execution of the mortgage deed, but also the KYC point that you made earlier. So under Regulation 28 of the MLRs, you can use a QTSP to satisfy your customer due diligence obligations. So effectively what you're doing there is you're kind of killing three birds with one stone. You're doing the QES, signing the mortgage deed, the customer due diligence piece, and also the safe harbor. So HMLR quite helpfully a little while ago said if you do the verification, effectively your KYC on the buyer or seller to a defined standard, then we will give you safe harbor that protects you from recourse from HMLR down the track. And there's lots of benefits to that as well. So it's super exciting, and that's a really unique proposition because with Digidentity, for us, Digidentity are the only QTSP that is also certified under the UK's DVS Trust Framework. So we're very excited about it, but HMLR do need to change those 2 points to really galvanize and accelerate the kind of market ecosystem.
So I love the idea that businesses are today already using some digital signatures, and they'll have said, oh, look, we want to improve the customer experience as a digital signature, but it might be at a lower level. And so there's this gap between the identity level they need for a KYC or a customer assurance and the level they're signing at. And by making it a qualified signature, they can address the points you just made. It could be higher assurance. It's now kind of the same level as you might need elsewhere in the journey. But what I think is also interesting is kind of some of the other way around. We could sign at a really good level when it matters, when we're doing something that is needing high assurance. But then because when you sign, you have to do the identity check as part of a signature, which, by the way, you're signing something that's really important. You're going to accept some friction, but we get this identity object off the back of it because we've now got this identity check that's being carried out. And the question I have been asking is, well, where else could we use that? So if I'm dealing with a solicitor or a lawyer and I need to sign something, here's my identity check. Well, now, as you say, we're going through the same level of assurance that satisfies those other checks that need to be carried out. But also, I've now done, my KYC on that individual for the account, and maybe I'm doing some other legal things. Maybe I'm doing my wills. Maybe I'm doing some other things that might be relevant for the law firm. And same is true of a bank. I come in, I do some kind of basic KYC as I arrive. We level up the signing moment because I'm taking out a loan or a mortgage or something else. We can level up that signing product. But now I've got these digital identity attributes that we could reuse. We could match that against the KYC that was done when I joined. Maybe it's been 6 years. Maybe it's been 10 years since I last did a KYC. And actually, without having to go back to the customer and say, hey, by the way, could you prove your address and stand on one leg and give us your inside leg measurement and all the other things that we might need as for compliance and just good audit. Maybe we could just kind of bundle it into a signature as happening anyway. And I think that's why I mentioned it being a bit of a sleeping tiger, kind of this opportunity to introduce high level of assurance, protect the organization, remove friction for the individual, but do so in a way at the right moment rather than doing it on the way in. And there's another point I suppose I wanted to ask was, if an organization is already using a digital signing platform, is there a way for them to level up? Like, you already got, let's say, a simple signature or advanced. Is there a way for them to say, well, we can, like with a DocuSign, for example, can we then say, well, we've already got that flow in place. We just need to add a step. So it's, we can just turn it on if you like. Is that possible?
Yeah, yes, it is. I mean, you can build trust over time as a QTSP. So there's two parts of being a QTSP effectively. So there's the RA and the CA. So the registration authority, the way that the identity provider, the QTSP, proves that Jamie is Jamie, and then the certificate issuance and management that goes on top of that. So we would need to take the user through an onboarding process to prove who they are to the appropriate level in order for us to issue them a QES to sign. However, if an organization, and any organizations out there that are listening to this, are integrated with DocuSign or Adobe or some of the other big signing platforms, Digidentity, we're baked in. So you don't have to have an integration, right? So you can it's literally, as you say, switch on that digital signing capability, and then you have the toolkit to then start sending employees or even, customers invitations to sign. So they'd get an invitation on their phone, it would pop up, they go through the Digidentity registration. That is, as you know, identity document, validate that using an NFC chip, selfie, liveness check, setup of a pin. It's all done in like a kind of minute or two. It's really, really quick, and you can start signing immediately. So it's all in a very seamless flow. So it's the tools are all there, right? And even the distribution's there. It's just no one's really talking about it or embracing it. And it's, I guess, if I'm being completely honest with you, it's, I mean, I've a deal of success in sales. And this is my one failure. I cannot understand how we haven't all got these certificates sitting on our phone and we're not all signing with legally binding signatures, because it's 2026. We've all got wallets. We've all got mobile phones. We've all got mobile phones with secure enclaves and the technical features that allow this to happen. But it's not ubiquitous. It's not being used. And that's my personal mission at the moment, to make this just, a daily thing, make it normal.
When people talk about wallets, it's often, assumed that there's a kind of a digital identity, an object, a bit like having my passport inside my phone. And it's like, well, how often do I use my passport? Maybe when I'm doing something at a registration office, or I'm going abroad. Once people have attributes, rather than kind of this whole kind of heavy identity, once people have attributes in their digital wallet, as well as a signing capability, that's what EIDAS is going to propose. It's not just well, I've got my driving license or I've got my passport, but actually I've got this bundle of attributes that says, here's my address, here's my age, I'm over 18, the ability to sign things. And we've got more of like a Swiss Army knife digital tool that I can carry with me. And that's, I think, when we start to see these use cases come together, the signing use cases, the proving use cases, as well as the identity use cases, the staff badge, membership credentials, those kind of things start to be put in a wallet together with signing. That's when it gets really powerful, and I think starts to create real utility. And that's when I think we'll start to see adoption change. And you said right at the start, behavior change is what this is about. And if it's just about signing for a mortgage, the available market of people doing that is tiny. If it's about doing something not just to prove who I am, but to provide a high level of assurance when I'm signing something or providing an address or whatever, I think that happens way more frequently, and we could start to see adoption kind of, as you say. I think we're in the early stages of that, the early foothills of adoption. But once wallets are in place, once high assurance credentials are in those wallets and signings available, that's when I think they come together, and it gets really, really interesting. So how are you thinking about, talking to organizations about QES? Should they start where compliance are, heavily involved, and there's an assurance bar, or is it where there's too much friction and we need to check who someone is? Where would you talk to an organization about qualified signatures?
I would say, if I had to pick one, it would be compliance teams, because I think that the advantage is, so it tends to be where there is high risk transactions, high value transactions, is where QS is most appropriate, because you're effectively protecting the transaction, and therefore, as a reliant party, you want to protect yourselves down the track. You need to bring a lot of different stakeholders on a similar journey, right? So you need to be talking to innovation teams and product teams and decision makers, as well as compliance, because I don't think that's moving the needle. I think the compliance teams do get it, but of course, their perspective on things is very different to other disciplines and areas within the business.
Well, I love that. I think it's such an important moment for identity and signatures, is this kind of pair of capabilities. So as I said earlier, digital identity is becoming a topic in many, many countries across many industries in a way that it probably wasn't 5 or 10 years ago. It was kind of buried in a security team. Now identity is becoming ever more important because of AI and deep fraud, because we're working remote more than ever. You've got remote colleagues, remote working, remote partners, maybe they're in a different country and working with a different business. So identity is kind of going up the ladder of importance. But what's being kind of left behind is the signatures as part of it. So not just, is it Jonathan, but what's Jonathan entitled to do, and can he sign for this thing? And when you put that together, there's this capability that is sleeping at the moment inside wallets, inside some of the identity services out there, where you can sign for things and prove that it was Jamie signed. So I guess that's the point we kind of leave it with, is that we're doing a level of assurance when you arrive into an organization or a new product, but then we're not doing that same level of assurance when it really matters, when you're transacting or doing something later in the organization, maybe signing for a mortgage or an insurance product or a health claim or whatever. And so that's where I think signatures becomes the sleeping tiger. The capabilities are there. The market kind of demand is there because it's lower friction, lower fraud, higher assurance, protecting the organization, like you mentioned. But on top of all of that, the EU is, screaming ahead with eIDAS, and soon nearly 400 million people are going to have this digital identity wallet that can sign. Together with the fact that companies like DocuSign already you can do, a good level of signature, but if you attach an identity to the back end, you can say, well, actually, we're now going to push you through this other process because you're signing something. We need a high level of assurance. They're already connected. It's just this extra step. It's more like progressive identity rather than doing the whole thing up front. So with that, I want to say thanks. I love chatting to Digidentity and you, John, because you go really deep in this space. But there are these corners like signatures, like QES, that I think need to have a higher profile, because I think it's going to really change how people experience digital products and how organizations like banks, insurance companies, and governments can interact with their customers and citizens.
Brilliant. Well, listen, always lovely chatting to you. Thanks for inviting me on again, Jamie. Look forward to talking soon.
Likewise. We'll see you soon. Thanks, everyone. Take care.
Thanks, mate. Take care.